You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we aim to exemplify customer focus, consistent technology, and streamlined solutions. In 2019, NASDAQ proudly launched the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. The VOLQ index uses only at-the-money options, offering the investment world a measure of volatility that directly points to the NASDAQ 100. Since then, CME launched VOLQ Futures, VLQ, and we've launched NASDAQ 100 Volatility Index Options, ticker symbol VOLQ, which are AM-settled index options on the VLOQ index that provide investors with a new way to gauge forward-looking equity market swings. Learn more about these exciting new volatility products at www.nasdaq.com/VLOQ. You can find more on NASDAQ's full suite of index options products at www.nasdaq.com/NASDAQ-100-XND-NQX-NDX-VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. And now it's time for a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know where volatility is? Well, let's track it down together, shall we? Because it is time for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which so many of you have been binging all week. Of course, if you do like what you hear, this show, any other show on the network, the full network feed, of course, our app, pretty much on any platform under the sun, to throw some stars our way. We have quite a few ratings. We appreciate all you folks who have done so, but obviously the more the merrier, especially in these crazy, tumultuous times. People are discovering options and indeed volatility literally every day, and they need a place to turn. So your newer reviews do help them turn their attention to the dark side of vol views. And of course, if you want to go full dark side, then you got to join us over there on the Pro, theoptionsinsider.com/pro. That way, guess what? Your day won't end with volatility views. You get another show after this, Options Oddities. We go deep into some weird, crazy, and wild activity. You listen to that show and you can't find one thing to make you scratch your chin and say, maybe I want to trade that, or at least that intrigues me. Then you're doing it wrong. Theoptionsinsider.com/pro. Plus, of course, we had a great conversation with the creator of VOLQ. Very appropriate for this program, Mr. Scott Nations, just earlier this week. He was taking on all comers with your questions. He was not reticent, shall we say, to express his viewpoint on things like zero-day trading and one-day VIX. You can check out, I think we posted a clip of that. You can check that clip out. And of course, if you want to hear the full thing, theoptionsinsider.com/pro is the place to go. As we go around the horn, see who's joining us today on Volatility Views. Let's start out back in the dark, stormy, some might say terrifying shores of Maine. Who would live there? Only one person. He is the rock lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to the show. Glad to see you survived your sojourn to Chi-Town, sir.
It is. I enjoyed it. I enjoyed doing the show with you. But I'm equally glad to be home. And for everybody on this show, I can regale them. I hit all of the high spots at Giordano's.
You hit all of the meat spots. You went meat central.
Yes, I had Carson's.
You even found a Carson's out in the middle of nowhere. I don't know. That was impressive.
Yeah, and then of course we had Gibson's, the best steak in the world. When the sea bass pays for it, it was quite delicious. And oh my gosh, and then the Portillo's. Where do you find all these? Where do you find such largesse? I can't tell you. Fantastic.
I highly recommend it, listeners. Andrew. Yes. Listeners, if you have the opportunity to A, go to Gibson's, probably the best steak in Chicago, and B, to have Mark Sebastian pay for it, which makes it doubly tasty, then I highly recommend you take that opportunity. And that voice also joining us, holding down the NASDAQ hot seat this week, our old friend, Mr. Kevin DAVITT, the head of NASDAQ Index Options Content. Mr. Kevin, welcome back to the show, sir. The streak is alive and well.
The streak is alive and well. I would like to plug, I can't believe you found a Carson's, but next time you're in town for ribs, I'm going to have to bring you to Twin Anchors. That spot has a lot of history and a lot of delicious.
Twin Anchors, also a good one. I was meaning to go back there for a while as well. Of course, they filmed The Dark Knight there, many other great scenes there as well, listeners. So a lot of good meat spots to uncover here in Chicago. As we take our time to uncover some vol, yes, it is time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. It is time for the Volatility Review, the portion of the show where we break down the week that was and indeed still is from a vol trading and trending and analysis and unusual activity, all sorts of fun perspectives. And coming into the start of the show here, we are seeing a wee bit more red. We are flirting with breaking to the downside, that magical 4,100 level that we've been kind of hanging out above or right at for quite some time now. Off about 0.6% in the S&P right now. The Dow off almost 0.5%. NASDAQ off about 0.8%. So looks like, at least for now, we are going to close the week in the red. A lot of concerns continuing to spread over regional banks. Of course, the lingering prospect of a default potentially on the horizon. A lot of things mixed into the heady stew that is dragging us to the dark side today, which means our vol friends, they were trending a lot lower. We had a 16 handle earlier this morning. The low for VIX, 1638. That's how low VIX got today, until all these other fears started rearing their ugly heads. When we kicked off the show, VIX was back up over a point from that level and pretty much unched down the week. It was at about a 1760 when we commenced operations here, up 0.1 of a point. So pretty much unched down the week, but also well off of its lows for the session. So yeah, 16 handle, that seemed a wee bit interesting, a wee bit low, of course, especially compared to my vol prognostication for this week. So glad to see we're moving in the right direction now. VVIX at a 98. So once again, frothy, listeners, up about 7 points from where it was this time last week. VOLQ, of course, the at-the-money vol of the NASDAQ 100. No skew here, just the facts, just the at-the-money vol here, listeners. Again, if you want to hear more details about the construction of that product, or if you have questions about it, that pro Q&A with Mr. Scott Nations, a good one. I encourage you to check it out. VOLQ 18.25, down about 1/3 of a point from where it was this time last week. So a lot of weird stuff on the fence here in terms of all things volatility. Let's go the opposite of the way we started. Let's start in the NASDAQ hot seat this time. Mr. Kevin, a bit of a weird week, a bit of a weird end to a weird week. What was catching your eye in the vol markets and indeed in the vol landscape this week, sir?
Yeah, so if this program woke me up weekly at noon Chicago time and you just had to take a stab where things are at, we keep talking about that 4,100 level in the S&Ps and like 13,200 in the NASDAQ 100. But I would argue things remain interesting from a volatility perspective. So few things I found interesting this week or over the past handful. This first couple points comes from Chris Murphy, and I'd like to take a second to plug an event that we are doing, NASDAQ is doing with the CFA Society of Philly in Philadelphia next week. It's sort of financial advisor focused, but we're talking a lot about options and options integrated into an ETF wrapper. If that's of interest, you could find like the registration page on my LinkedIn or contact me. Anyway, Chris points out that the S&Ps are on track for the sixth consecutive week where on a close over close basis, Friday to Friday, it's less than a 1% move. And that's arguably why we see a VIX earlier today with a 16 handle. That would be the longest such run for the S&P, the narrowest range since December of 2019. I would point out that was very near a local top. Also from Chris, we have the highest VIX call open interest in more than 5 years. I'm highlighting Chris a couple of times here. He is going to be the person that I talk to as part of that event next week, and he puts out a lot of really good, some vol-focused research from Susquehanna. He too was talking about the June 30-40 call spread that friend of the show, Russell Rhodes, has followed. There was some action there this week. I believe it seems like vol markets are behaving fairly normally, and I say that with air quotes, or I sit here and say that with air quotes. So we've had broad markets that have been range bound and kind of slightly higher. In that situation, skew tends to move up. We have seen that. Check. Forward vol expectations typically decline. Check. We've seen that as well. From a catalyst standpoint, we largely have Q1 earnings in the rear view now. We do have a couple of wild cards, which we alluded to at the kickoff of the show with regional banks. Is that contained? Last time Andrew was on, we were talking about the likelihood that First Republic might go into receivership. That happened. Will there be more? And then this debt ceiling negotiation, which apparently wasn't consummated at any point this week, and now Congress goes on break. They have a nice schedule, maybe not as good as the grain traders back in the day, but quite good. Okay. Also, big picture, I'd like to highlight the relative outperformance on the part of the NASDAQ 100 relative to the other majors. Now, it is very pronounced since the start of 2023. In fairness, the NASDAQ 100 underperformed last year, but this year the NASDAQ has outpaced the SPX, which is its next closest major competitor, by 1,500 basis points, or like 15%. That's a big, big difference. The NASDAQ 100 is up about 22%. S&P is up about 7%. Dow is essentially unchanged, and the Russell 2000 is down 1.5%. So significant divergence. That alone is interesting. How does that translate into the volatility markets? So forward vol estimates for the NASDAQ 100 relative to the S&P 500 has collapsed. On a relative vol basis, that makes me think, or I think you could make the argument that NDX options might be cheap relative to SPX options. The relationship is rarely this low. I was running some numbers, and you could reach out if they're of interest there. But if you look at apples to apples, so I'm using VXN, VIX methodology, relative to VIX, and you look at the premium, so VXN almost always is at a premium to VIX. In percentage terms, it's down to about 15% right now, nearly the lowest in 2 years. Rarely are the spreads that narrow. We talk about VOLQ relative to VIX spreads at the end of the show. So those NASDAQ 100 forward vol measures are arguably compliance reasons cheap relative to S&P 500 vol. And I think from a potential spread widening standpoint, that could be an interesting setup. That's what I had my eyes on.
A lot to unpack there, sir. I always get nervous when people make analogies from the current market environment back to the days of December of 2019. Oh, we were all so young and innocent back in December of 2019, Kevin. None of us knew what was on the horizon for us in just a mere few months. So that always makes the hairs on the back of my neck stand up when I start to hear those comparisons.
Appropriately so. It is kind of a brave new world post 2020, and I think data should be evaluated through that lens. Good point, Mark.
All right, let's keep on rolling. Oh, your hair's standing up, listeners? Well, then don't worry. I got the rock lobster for you. And he's sure to push you over the edge with some sort of terrifying factoid. Mr. Rock Lobster, what do you got stored for us today, sir?
Well, I can do my mea culpa that I thinking the bank thing was going to be done, and then I think we talked at that Friday, and then on Monday, JP Morgan just gets the whole bank for $2. Like, it's almost like the fix is in with this stuff. Like, so what are all the regional banks going to be consumed by like the 5 major banks? It's a little dystopian. And another thing is all these banks are having trouble because the Fed made them buy government bonds and put them on their balance sheet, and now everybody's freaked out by it. Like, I'm sorry, but the Fed is starting just to look like a wrecking ball that is not really. Anyway, like every once in a while when they need to step in and provide liquidity when they don't, but I think everybody has just gotten used to this, like the market clearing mechanism not working. So because the Fed screws it up every time. Because I think they just, at this point, they're just trying to fix one mistake after another. Anyway, but as far as, the NASDAQ, which is unbelievable performance this year, 22%. However, if you look at the equal weighted NASDAQ, QQQE, it's gone nowhere since January 31st. So there is a little bit of concern that a lot of the rally, and I think holding the market up has been, NVIDIA, Apple, Google, Microsoft. Everybody's like buying the AI future again. And tech goes like this, but I mean, really, it's like 6 stocks are kind of holding the whole market up. I mean, and then the SPX too. Everything else has been any kind of Main Street business or whatever is kind of struggling, at least, from a P&L point of view. So I find that one a little, that is disconcerting when everybody's just bailing on everything and going into the Q stocks. So it also, you ask the question, like, when is everybody going to unwind that trade, right? Do you want to pay whatever 30 times earnings for Apple or, Microsoft or something like that? Okay, I get the AI thing could be big and all that, but, there's a lot of companies that do the AI thing that have the ability to get it out there. So anyway, so you have that as sort of, and also think about it. If the market wasn't paying up for those stocks and just sitting on the sidelines, where would all the indexes be? But as of right now, people are piling in and they're happy. They're happy in big tech. And at some point, as we all know, like everybody cares about the multiples eventually. So they cared last year. And at least as of right now, everybody's, they're looking for something to buy. And I have a feeling that, you turn around, you look around the universe and you're like, oh, well, now I can't put my money in the bank anymore. So what looks good? Okay, well, Google looks pretty good. They got a lot of cash on the balance sheet. Apple looks pretty good. Microsoft looks pretty good. So, I mean, I think there are reasons people are piling in. It's just they're getting expensive. And from a vol point of view, just funny that Kevin said that since I don't have that kind of compliance problem. Yeah, I bought some Q strangles. And then the funny thing is, then I'm hedging the Vega risk with VXX puts. And the reason why is because we have like absurdly high contango values in the June cycle. Now, there's always mathematical reasons for that, but then it's there because of this debt ceiling thing. Everybody's like worried, so they're bidding all that back month up. And the short-term volatility is still only 15%. I mean, the reality is VIX is up 0.5% today, and SPX is down 0.5%. Or VIX is up 50 cents, and SPX is down 0.5%. That's, the market's not moving. It just isn't, right? And I think a big part of it is everybody knows like the Fed put is still alive. It is a little bit, I think it's Goofyville that we don't use the market clearing mechanism, but that's what it is. That's the market we have, and you trade the market that you have.
I don't know if this is crosswise, Andrew, but your structure with the Q's strangle and the VXX puts, that's intriguing to me. And I'd be curious what how would you plan on, what would be the catalyst to get out, and how would you do it?
Sure. Oh, that's a good question, Kevin.
Thanks.
So generally, so how I plan that strangle is, I don't like paying any more for the strangle than I estimate VXX can decay. So if I buy a put in VXX to June, that bottom decay part of the cycle is like $31. So I know the strangle I want to make has to be right around, $3.50 to $4. I don't want to spend a whole lot more than that. So that usually is an upside call, just in case we get that blowout upside, right? Because when everybody piles in, we get the melt up. So you can't discount that. And then you just buy a put spread. So, and then after that, Kevin, I leave the VXX put alone. And then I basically close what's making money. And I want to wait till my puts are up at least 50%. And then I'll basically stop that area. And if we get a reversal, I'll close the VXX, the QQQ put, because generally by then the position's up enough money, or it's kind of hard to lose. And that's sort of how I trade it. So you have to sort of peel the pieces off as they provide money. Mm-hmm. And if, and I think, to be honest, the best scenario is Qs just keep rallying. Everybody's like, okay, things aren't that bad, right? We're all worried about nothing, and the Qs keep going up. Then what you have is you end up with, your strangle ends up being long delta, and your long delta short vol, and you just let it go. And, who knows where it's going to end up? If I knew where it is going to end up, it'd be a lot easier to trade it. But that's kind of the upside scenario. And then you just keep the put spread as a kicker. But the thing about that trade is, you can leverage the contracts a little easier, because allocation wise, your net risk on it is not very big, depending on how you manage it, of course. But and that's the trade. So I found that structure works really well when the vol futures are expensive as they are and you don't really know what's going on. And historically, remember, Mark, we talked about this, I think, yesterday. In 2020, remember when the contango was like $5 or something, right?
Yes,
and
yes.
SoftBank was buying up all the Q stocks. And I'm like, dang, this looks, this looks pretty familiar. We don't have all the political issues because we had the election and COVID and all that kind of stuff. But I mean, it's eerily similar, right? You got kind of government dysfunction. Everybody's piling into like the top stocks in the Qs. You got the massive contango again. It looks eerily the same, but the Qs blew up on the upside, and then they were down like 12% in like 3 days. So, I'm just looking at that as, how I would kind of go about unwinding the trade. And I'd have no trouble getting rid of the call spreads, because if you have that trade on, Kevin, you rally hard. Let's say we rally. You could just get rid of your QQQ call for a profit. Because you still have the Q put spread and the VXX put as a long delta as a trade. And then, if vol just keeps going down, that VXX put will pay the bills easy. As we all know, VXX is reliably crappy when volatility starts to go down.
Is it back to being reliable again? I don't know. I don't know if I could say that for certain yet, but it's getting better.
It's reliable enough for me for a 10 lot.
Okay, there we go. That's a good caveat to put on.
10 lot with 40 days in duration.
Reliable enough for a 10 lot. That's a good tagline for VXX. I like that. They should put that in their marketing.
I'm going to just say the Qs are more reliable than the VXX. So I'm the long-term holder in Qs, off and on, but not in VXX. There you go. There's my rant. I'm done.
If I have learned one thing about Andrew doing all those options oddities episodes with him now, is he loves a good spread that he could take off piecemeal and leave extra legs for credits or for very cheap. A free leg to Andrew is like manna from heaven to him. He loves that. So anyway, he could
a
get
Gibson
to that.
steak paid for by Mark.
Yes, that's the other thing. Both of those things, a free leg, a free calls in the Qs, a free puts in VXX, paid for by other legs. He loves that. Or, of course, a good steak paid for by the meatball. Either way, he's a happy camper. Let's see, going out to the vol surface, Andrew was just talking about the contango we're seeing out there, listeners. Hasn't seen it really since the dark days of 2020. This is the second analogy we've seen on the show to that period, late 2019, early mid-2020. Starting to spook me, listeners, here. But let's go out to the vol surface for this week. And spoiler alert, the front portion of that term structure is down, pretty much down the same across the board, almost half a point in the May future. The same thing for the June future. But as Andrew was pointing out, we have some interesting contango. When we kicked off the show, we had that May future at about a 19 even. And then you go out to even November, or not, forget October. You go out to October, and it's at a 24. So you're talking very steep. Mr. Kevin, I was talking about this with Andrew yesterday. What are your thoughts on what we're seeing out there in the term structure? And are you a little bit taken aback by the degree of contango we're seeing right now?
So we have touched on this appropriately over the past couple of weeks. I believe it was 2 weeks ago, the month one, month two, which is where I focus most of my attention as opposed to the middle or back of the curve. And certainly if you trade VXX, that's where your attention ought to be focused. Excuse me. But got out to nearly $3 wide, and it's been pretty consistently $2 wide of late. Sorry. I think justifiably in an environment like I described a couple minutes ago, where the S&Ps have been largely unchanged for the better part of a month and a half, would I want to lean into it there? What I mean by that is, do I think it's likely to move back out to $3 wide? Well, if we continue to stay at 4,100, that's possible. But from a risk reward standpoint, probably not. If I was just containing my exposure to the VIX futures. But if you do look at the spread between like the front month and say October or something like that, that I think is much more interesting. The fact that your middle and back end of the curve has remained fairly consistently around that 24 level where you see that front month decay. Is there a play there? Yes, possibly. Is it something that I'm keyed in on here and now? Now I sort of am. I've talked myself into it.
There we go. That's what this show is all about. Talking you into all sorts of fun things that you maybe hadn't considered coming into it. Just listen to Options Oddities if you want a little taste of that, listeners. Andrew and I talk ourselves into all sorts of danger all the time. Mr. Rock Lobster, sir, what's catching your eye out there in this super steep contango?
Yeah, wait a second. The clamor boat's going by. I don't know if you can hear it, but so yeah, I think that, again, those VIX futures are a reflection of the forward vol and SPX. And the thing that I find, most interesting is the lack of giddy up in any short-term options. And as Kevin was saying, like, we're kind of stuck around here, this 4,100 area, the new magnet, but 9-day VIX is 1483. I'm sorry, but that is not the level that people freak out at. Okay. At 1483 on 9-day VIX. That is not the freak out level. VIX cash 1719, June future, 20 and a half right now, something like that. So there is plenty of vol in the system, so to speak, meaning those premiums relative to realized vol are still pretty high, but we ain't doing anything. So I think, again, iron condorville, stuff like that. I don't normally say that, but sometimes it's like the best trade, it's just going to rot away. And right now, I think VIX call spreads are pretty cheap as a hedge. Like, really, where are we going? It's pretty clear 4,200 is a very difficult place to go above. So if you're setting up an iron condor, like, okay, you buy junk VIX call spread, maybe a 420 call in the SPY, and sell some iron condors. Again, we can't just tell people what to trade on the show, but you see the condition you have in front of you, and it's kind of what it is. I don't see, if you've been selling vol in the SPX, via iron condor, or kind of selling the junky stuff, you've done pretty well over the last couple of weeks. So I think that's, in a lot of ways, the curve tells you the trade that works the best. And then you just have to manage it, like we talked about before, peeling the parts off that make money when they make money. The key in this market is you can't be greedy. That's the problem. Like, because it looks like we're going to zero. Literally, like last week, remember, for a while, like everything was just horrible looking, horrible. And then Apple earnings, everybody loved them for whatever reason, but they did. And then everything was clear again. It was like, the sky had opened and the rain was falling gently and everybody was happy. So, you have an opportunity maybe to close some stuff when it's paying, but you just got to take what you can get. There's no, you're not getting that 8-9% sell-off right now. It's not happening. So you just accept that fact and then you move along. But from a contango point of view, like, things tend to lock up, and then you hedge for the thing that you believe is the total outlier. But they're probably still going to pay you. The knuckleheads in Washington will probably come up with a solution to the debt crisis. That, of course, they create themselves. You'd think you could just run the government like every business does. Okay, you have a budget. That's what you get to spend. Can't spend more than you make. I don't know why this is so hard, but maybe that's why I'm not a politician.
Indeed. Let's all live on the shores of Maine, sir, where things are just happy all the time out there. Clam boats going by, clam pirates, all sorts of fun on the shores of Maine. Let's see if there's any fun out there in the vol market today. And you know what? It's kicking into a little bit higher gear in the last hour or so out there. VIX options looking kind of sleepy earlier in the day, not that long before showtime, only about 250,000 contracts on the tape. Didn't seem like much was going on. And now we're kind of kicking into gear in the last hour or so. We pretty much doubled that, closing in on 500,000 contracts right now, 494,000. So perhaps the fact that this sell-off is continuing, even though it does seem like we have bounced off the 4,100 level, at least for right now. So right now, at least that level continues to hold. But either way, something has kicked us into a higher volume gear over the course of the last hour. Also kicking up our ADV over the course of the past week. Back up to 787,000, up another 30,000 or so. So starting to get up there again. Not quite that 900K level we were at not too long ago, but pretty darn close. So things looking a little bit robust out there in VIX land again. Let's look at the top positions and see what's looking robust out there right now. Once again, listeners, it's all calls all the time. Only one put to be found in the top 10. Let's see if we can find it together. It's not number 10, listeners. That's 166,000 of the June 26 calls. Number 9, $178 of the June 25s. So nice little upside / vertical action there. Number 8, 188,000 of the May 25s. Number 7, 201,000 of the June 23s. Number 6, our first and only put in the top 10 this week, listeners. 241,000 of the May 17 puts. Interesting. Those are looking a little better earlier this morning than they are now, but intriguing stuff. And then number 5, 257,000 of the May 50s. Our old friend 50 Cent. Is that him? Is he going to get out anytime soon? Not probably this week, listeners, but interesting to keep an eye on nonetheless. Number 4, 264,000 of the May 30s. That could be our bellwether going back to the May 50s again. When someone whoever has those starts to close those out, that's probably a moment maybe you want to sit up and pay attention to what's going on out there in vol land. Number 4, 264,000 of the May 30s. Number 3, 320,000 of the SEPs 60s. Remember these, listeners? This was part of that funky 1x3 we talked about last week. Is that back? Is it ratio call spread / back spread season in VIX again. And if you listened to this show for a long time, that used to be the vol trade. Everyone would come out, sell 1, buy 2. Sometimes if you get a little hot and bothered, you buy 3, maybe buy 4 to the upside, depending on the skew out there. But that trade went away for the better part of the last few years. If you listen last year, it was all about crazy upside. Very little of the selling one. It was just buying the upside. Maybe we're back in that environment. Either way, number 3, 320,000 of the SEP 60s. And then number 2 and number 1, you know what they are, listeners. Kevin was talking about them earlier. Our favorite / least favorite trade on the board. Number 2, 442,000 of the June 40s. And number 1, 581,000 of the June 30s. Obviously, that June 30-40 has gone up more in some interesting different ways. We talked about some of the later legs where people actually selling that. So it's not all folks just piling in to buy that thing. Remember, go back to when that was opened and we had the once and future and now present Dr. VIX on, and he took a very dim view of that trade. I don't think it's improved over time. Let's get out to what's lighting it up out here today, listeners. Like I said, almost 500,000 contracts on the tape. And the big dog out there today in our top 5, 38,000 of the June 25s. Followed by number 2, 29,000 of the May 17 puts. So once again, that put strike pretty active. Number 3, 24,000 of the May 18 puts. Number 4, 23,000 of the June 18 puts. And rounding out the top 5 this week, listeners, 22,000 of the May 30s. Interesting. Yesterday, a little bit more paper on the tape, 789,000 to be precise. We seem like we're headed for that level again today, but we shall see. The big dog yesterday, 85,000 of the June 30s. Kevin was alluding earlier to some action on those strikes, and here we see nearly 100K going up yesterday. Looking for the 40s, a little bit less of those. We'll get to that in a second. Number 2, 56,000 of the May 17 puts. So once again, one of the hot options of the week. Number 3, 49,000 of the May 24 calls. Number 4, 41,000 of the November 70s. Are we getting back into that season, listeners? Is it that time again? Nov 70s? I thought we had washed our hands of that stuff for a little bit, but there we are, 41,000 of them popping up yesterday. And rounding out our top 5 yesterday, listeners, the other half of that spread, 35,000 of the June 40s. So obviously not quite 1-to-1. Some intriguing stuff there. Wednesday, the big dog day of the week, almost 1 million contracts, 918,000 to be precise. The big dog, once again, May 17 puts. They may get our VIX contract of the week title just for all the paper going up with them. 89,000 again on Wednesday, followed by number 2, 55,000 of the June 30s. So those two strikes / options very much in the crosshairs this week. Number 3, 48,000 of the May 19 puts. Number 4, 47,000 of the May 18 puts. Looks like a little bit of vertical or rolling action there. And rounding out the top 5 on Wednesday, 43,000 of the May 24s. Tuesday, a decently active day, but nothing crazy. 576,000 contracts on the tape. Take a guess what the big dog was on Tuesday, listeners. If you said the May 17 puts, 45,000 of them, you are the winner chicken dinner yet again. Number 2, 38,000 of the May 22s. Number 3, 38,000 of the May 28s. Number 4, 33,000 of the May 23s. And rounding out the top 5 on Tuesday, 32,000 of the May 24s. Getting out to Monday. Monday was kind of the meager day of the week. Only 364,000 contracts on the tape. The big dog, once again, take a wild guess. If you said May 17 puts, yeah, you are the winner chicken dinner yet again. 23,000 of those. So that definitely gets our strike of the week award if we had such a thing. Number 2, 21,000 of the May 18 puts. Number 3, about 15,000 of the May 19 puts. I'm seeing a bit of a trend here, listeners. Number 4, about 15,000 as well of the June 19 puts. That paper lines up almost exactly, so maybe a bit of a roll there. And number 5, 14,000 of the June 30s. So May 17 puts definitely taking it this week. Right behind it, though, we definitely have some action on the June 30s, even a little bit of the June 40s. Kevin, you were saying earlier that you saw some interesting activity out there on those strikes this week. What caught your eye in the June 30-40 ongoing dance that we've been talking about for a while? And then is anything else catching your eye out there in the land of VIX options this week?
Anytime you see those well out of the money VIX options, I think from a narrative standpoint, the financial media often makes too much of it. In the business, we talk every week on here about VVIX and what on a relative basis the cost of vol is, and really the people that understand it are probably looking to express a view there or hedge off some meaningful risk in the event that we did see a vol blow up. And so I am sort of less drawn to those way out of the money things. But going back to one of the points you made and Andrew highlighted really well, I think that structured exposure in index products tends to make a whole lot of sense. There are tons of opportunities to use options in a very creative way to express a view where, no, we're not just talking about going out and buying a call or buying a put or vice versa for directional exposure, where you're able to craft a position that allows you to potentially make money in a variety of different scenarios, depending on how you plan on monetizing that. And ideally, here's where my emphasis is here, reduce your net dollar risk. And the way Andrew laid out his sort of thesis and what you're talking about here, where we see this play out in VIX options, is very much, I believe, an expression of that. And so I don't make too much about these 30, 40 call spreads because you just don't know what's behind it. But when there's big volume and we see huge open interest in VIX calls, that is interesting and perhaps unsurprising against the backdrop of a low realized vol market and people with, maybe longer memories than we used to have in the event that VIX did move back up towards 30. So I didn't directly answer that, but I think the positioning is reflective of a sophisticated end user and expressing sort of the functionality that's embedded in options in products that allow you to do that.
Mr. Rock Lobster, same question for you, sir. What caught your eye out there in the land of VIX options, and how many of those May 17 puts did you buy this week, sir?
I did do some May 16 lotto tickets when they were down like a nickel. I haven't bought the 17 puts yet because I still have a bit of a May put position, although I have closed some, but I still have some. Like,
apparently you're the only one. Everyone else and their mother was gobbling these up this week.
I know, 240,000. I mean, the reality is when VIX trades, it traded. So before, I guess what happened? So JP, and this was kind of a strange vol anomaly, I thought. And I think maybe it was just because VIX got caught at an odd time index wise. But on Monday last week, we were in Chicago, VIX got down like 15.5. And because we had that sort of Goldilocks kind of like let's just call it a wispy rally up in SPX just a little bit. Enough to kind of smash VIX down temporarily. The liquidity provider took the ball down really fast. And then it kind of blew up again, right? So I think people piled in and like, okay, we could see that number again because you know what? They're going on what, vacation or whatever, the Congress. So you're not going to hear anything about the debt talk. So all of a sudden it does appear you could have a week where there's not a whole lot of action. There's no real news coming out, and then it's like one of those things where the liquidity provider, they could take the vol down real fast in the SPX, but they can put it back up really fast again too, if the sellers start coming in. But yeah, I think I did see a lot of those puts, and we have been talking about some of those upside call spreads. And like a 17 level put for 13 cents is it is a cheap lotto ticket. But it's like I already got enough of them. It's like sort of how many do you want per cycle? So I have to, it's sort of like beers, Well, after 2 beers, I don't want any more. And it's kind of like sometimes with like those at the money vol puts, especially when we have not been able to get, we haven't been able to stay in zone 2 or get down to the bottom of it for, 3 years now. So that's why there's a reason the 16 puts are at a nickel. And there's no bid on the May 15s, and you go to the Junes and they're just as cheap. So it's just the market has not been able to I just sort of catch its breath and sort of relax. And that's what we got. So anyway, as far as those puts go, they're 240,000 open now. And as far as I could tell, that's some of the biggest open interest around. And, the thought that with that much open interest that we could actually settle below 17, I don't know. Just call me crazy, but I have a hard time believing that. It could happen. It could happen, but the little voice in the back of my head saying, the 17 puts and obviously now the 16s are probably going to be where the hill dies on. But you die, the VIX dies on that hill and does not get below it. So we'll see. But clearly, it's not the market moving that's keeping VIX where it is, because there isn't enough realized vol to really justify any of the prices right now.
Does seem like maybe 17, a bit of a bridge too far. We will find out in a week, listeners, if not even, if those May 17 put holders are happy or sad. Let's keep on rolling out there. Listen, let's go out to SVIX, our inverse friend, hanging out at about a 19 right now, up a little over half a point, about 0.6 of a point from where it was this time last week. Not a heck of a lot of paper to talk about out there, a little over 500 contracts on the tape. The ADV is about a little over about 1,000, about 1,100. So not exactly lighting the world on fire out there. The top positions out there is only really a couple of note. The top position in SVIX, once again this week, the June 8 puts, about 1,900 of those, followed by number 2, 1,800 of the May 8 puts. So some folks have an axe to grind there on the 8 strike. Long way to go from 19 down to the 8 strike, listeners. But outside of that, not a heck of a lot, really, of note going on out there in SVIX. Let's roll on out to its sibling product, UVIX, at about a 1080, down almost a full point, about 0.8 of a point. Seen a little bit of paper on the tape today, about 11,000 contracts. That's more than the ADV, which is 8,500. That's up about 500 over the past week as well. So, again, starting to move in the right direction. But this is the problem. I said this before when they did their kind of meager reverse split. I said, I hope they like reverse splitting every couple of months, because if all you do is go right back up to 20 or 25, you're going to have the same problem. And that's pretty much exactly what we have. They're threatening a 10 handle again, which we all know is typically where these products start considering a reverse split again. So we're kind of right back where we started a few months ago. So I wasn't just lamenting because I like a nice juicy downside. I do like that too. I will admit my bias there. But also, who's going to reverse split these products every couple of months? Well, apparently UVIX is planning to do just that. The top position out there in UVIX right now, 2,400 of the May 12s, followed by 2,000 of the June 10 puts, and then 1,200 of the May 11 half calls. Those are going out today, so those seem like they had their dalliance with the sun, and then now not so much. Looks like losing a lot of that juice just today, so that's another heartbreaker out there in the vol ETP space. We've seen that movie once or twice before. UVXY, 3.5 listeners, down about 0.2 of a point. So, as we've said, not a heck of a lot going on out there. That's another one. This needs to reverse split now, and it needs to do so for some size. Hopefully, we get a nice 10-1, something like that, to really sink our teeth into. Decent paper on the tape, all things considered. 148,000 contracts right now. The ADV is 176, down about 4,000. The top position out there in UVXY right now, 35,000 of the SEP 8s. The 8 strike. What's up with the 8s and all these products? So someone's got huge axe to grind in both directions. 8 puts and 8th calls here in multiple products. So I'm not sure what fascination the 8 strike has, but apparently it is sizable. VXX, we're just talking about it. Is it back to being reliably crappy? I think Andrew put it best earlier in the show. It's reliable enough for a 10 line. Not much more than that. Better faint praise I have not heard. 37.80, down a little over a point, about 1.2 points out there right now. A little bit of paper on the tape today as well. 38,000 contracts. That's good because the ADV is only 42,000. That's up slightly on the week, about 3,000. But a VXX used to be a product that we could reliably talk about beating VIX options in volume quite a bit back in not that long ago on the show, listeners. Used to call those the tail wagging the dog days when VXX was doing more than VIX. And yet we have not seen that in quite some time. And now we have VIX closing in on 1 million contracts ADV, whereas VXX circling the bowl. Much of that due to its own problems, right? But still, it'd be intriguing to see if this thing can start catching a little bit of a bid, at least from a volume perspective. The size position out there in VXX right now, the June 80s. These are pre-split adjusted VXX1. June 8 O's, 12,000 of those bad boys. So all sorts of weirdo paper afoot out there. Mr. Rock Lobster, anything catching your eye in the world of the volatility ETPs before we get to a little bit of the old volatility voicemail, sir? Oh, no, he has muted himself.
This is the part where I get right home again and mute myself.
It was impressive to watch you self-mute on the panel last week. You had the microphone right in front of you, and yet for whatever reason, you just neglected to use it. It was great.
I couldn't even turn it on. So just for like VXX, VXX1, it's the split and the old split, so people should just be mindful of the liquidity roach motel that is VXX1. So, you know what? I think ever since that, I haven't seen, the big volume. You remember when those year-out VXX puts used to trade in the hundreds of thousands?
Used to be one of the best trades. There was one of the few set it and forget it trades was the Jan VXX put, right?
And it is just, the open interest in January 2024 VXX is about 1,000 contracts.
Isn't that just indicative of all the problems right there?
Exactly. It's just, you know what? When you just make people, when you make every vol trader in the world miserable on the same day, you're gonna hurt. You're gonna kick yourself because those are fees they're not getting. So anyway, it was so that's why it's like anything. It's institutional failure. We'll call it. We'll just leave it at that.
We won't leave it without a little bit of your input, though, listeners. Let's get a real quick volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. We had a couple of fun questions of the week rolling. Of course, yesterday we were joking on the option block and indeed TWIFO programs that FedWatch over there at CME showing a nearly 50% probability of a rate cut as early as the July cycle, listeners. That seemed a little bit outlandish to us, but we thought we would put it out to you folks, the audience at the end of the day, the ultimate arbiter of these things. And we said to you quite simply, do you think that's going to happen? Yes or no, that's insane. And over 90%, 91% of you pretty much said, no, that's insane. So I'm glad to see saner heads prevailing there. Only about 9% say you're looking for a rate cut in July. I think that 9% might be a little disappointed, but glad to see our savvy audience on top of the game, which gets around to our actual, that was just a fun little flash poll, our actual question of the week, Kevin, and I'd love to get your thoughts on this one because it is interesting. We obviously have a very savvy, a very bleeding edge audience. But these are interesting times. A lot of the questions we're getting now in things like our pro Q&A sessions and others are, man, how should I be positioning myself right now? Should I just wash my hands of all this stuff? Should I go to cash? What should I be doing right now? So we thought we'd ask you folks this week, very straightforward. In these troubled times, where are you allocating the majority of your portfolio? Cash, crypto, equities, or commodity/fixed income? We had a lot of write-ins. Friend of the show, Jim Carroll, we wrote in, took umbrage that there was no long vol, short vol. I get it, but it's only 4 slots. A lot of you took umbrage with the commodities, fixed income being mushed together. Again, blame Twitter, only 4 slots. But I digress. Kevin, what are your thoughts, sir, on where people should be allocating if you have some right now? And then B, more importantly, where do you think our savvy audience is allocating right now, sir? Cash, crypto, equities, or commodity/fixed income?
Okay, I'm going to answer the second question first. I'm going to assume the audience or the preponderance of them are equity focused and allocate there with maybe a tail on the commodity side. I hope it's not crypto, but that's my own bias creeping in there. And I'm not knocking any crypto allocation, but in terms of here and now, I don't see that. And from a personal standpoint, hedged equity, I am concerned, but that's my nature. I grew up trading options and started in late 99 and saw what happened not long after that. So, but I also believe in the performance of indices over a long time frame. So personal answer is equity. My assumption is that the audience is the same with perhaps commodities in the 2 slot. Do we have a full breakdown?
Yes, we do. I'm going to get Andrew's thoughts first, and I will reveal the results with a few hours left. Mr. Rock Lobster, which way are you leaning? Which way do you think our audience is leaning? I think yesterday you were leaning towards cash. Are you still there? And do you think our audience is there, sir?
I think our audience is still cash. Me personally, no. I'm actually. I just think I'm looking at all the cheap industrial stocks that pay big dividends, and like, okay, it's just like anything else. You spend half the year selling the stuff that's making money, and then the second half of the year buying stuff that's that the market hates. So I don't see a whole lot of reason to change that. And if I need to, hopefully some of these fancy SPY vol strategies will make me some money if we have a nasty day.
There we go. Well, our audience, our savvy bleeding edge audience right now, 45.6% of you are in cash, listeners. So that's wow. Very interesting to me. And
hopefully cash yielding, somewhere in the ballpark of 5%.
Yeah, somewhere 4.5%, 5% at least. Yes. But we've had a lot of talk about the optionality of cash lately on the network, and it is very interesting to see these results. 32.4% for equities, 19.1% for commodities and fixed income. Crypto was leading in the very early blush, the first couple of hours of voting. It has now fallen to 2.9%. If you disagree with those listeners, you got a few hours left on this, so you might just, if you're listening on the podcast, might just have time to get in there and make your voice heard. As we make our own voices heard now, it is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners. Last week, I had myself a VIX of 18 and a VOLQ of 18. Now, we had a very tight market last week, and it's actually a pretty tight market coming into the end of the show here as well. I wish I could swap my VIX for VOLQ, though, because VOLQ's at an 18.20 right now. VIX at about almost a 17.40. So, again, that spread coming in as well. About a 0.8 there, which is kind of interesting. I kind of predicted about a 0.9 spread. So I was close on my spread prediction, at least. But no winner chicken dinner for me. Everybody else was, I think, north of me. Kevin was at an 18.5 in VIX, so a little over a point above. VOLQ of 20, so no joy there. We had Eric Lewis on the show last week. He was at an 18.25 in VIX and a 19.20 in VOLQ. So he was about a point and change above on each of those as well. So no winner chicken dinner as well. Let's look really quickly. Daddy Longlegs was at 18.35 in our chat. Well, our producers, Nichols, 18.10. Producers will go through all these. They surfaced some of the closest ones for me here, but there's a bunch of them. My producers will go through all of them. If you are within our 10th of a point margin of victory, you will hear from our producers, listeners, with fabulous prizes in store for you. A long way around, listeners, to saying no winner chicken dinner this week. So tell you what, I'll be nice this week. I will set the tone, let everyone else have another minute to mull over or perhaps cart me out there. We're actually closing on a 17.5 now in VIX. All this contagion, spookage out there. I've been leaning a little bit more upside. I've been close. I was close again this week, but not quite. No cigar again this week. I don't hate where I was last week, but a little bit north. I'm going to give myself about, I'm not sure, full 18.5, not a full point. I'm going to say 18.35 for VIX this time next week. I don't think that VOLQ spread is still going to hang out close to around that level. So I'm going to say 19.20 for VOLQ. All right, let's go out to Kevin next. Kevin, sir, what are you feeling for this time next week, VIX and VOLQ?
Can we talk for just a second about the fact that the spot markets are 40 cents wide right now with the 40 cent premium in VOLQ? That is pretty interesting.
Yes.
It loops back to my point earlier about arguably forward NDX vol being cheap on a relative basis. I am not saying that volatility cannot move lower, but on a relative basis, the NASDAQ 100 vol looks cheap. If you have to buy one or spread it, again, a more structured approach, that looks like the way to me. But do your own homework. Okay, so my prognostication would be that I don't see the catalyst for us making big moves in either direction. I wouldn't be totally shocked if we continue to talk about this 4,100 and 13,200. And so to that end, I will say 17 VIX and 1750 VOLQ.
Wow, spread continues to evaporate. Intriguing stuff out there. It's like we're bouncing off the 4,100 level again as we're speaking here, listeners. So we keep threatening it. We'll see if we can break it by the end of the session. Mr. Rock Lobster, final word to you, sir. What are you feeling for Vol this time next week?
I have to say, I feel kind of bad scumming Kevin on this one right now.
I'm flattered.
Huh?
I'm flattered. I made a good market then.
I'm surprised if VIX moves a whole lot or VOLQ, and I agree with him. I think QVOL is relatively inexpensive as it just the Qs just sit up here at I would say a pretty decent level from where they were in October, right? So I'm gonna go 1725 VIX. It is a little scummy, and VOLQ I'm just gonna go 18 even VOLQ.
All right, listeners, that music means we have run a little bit long, but we had fun talking all things vol this week. Hope you had a fun time listening. If you're on the on-demand side, that will conclude your broadcast week. If you're on the pro side, hang out in the live. We'll pump some fun stuff in there. Be back in a little bit to talk all things options, oddities. But before we go, let's go back around the horn. Kevin, if folks are intrigued by all things NASDAQ options, they want to sink their teeth into some more content, where should they go? What should they do?
Well, if they're in the Philly area, they should register for our event on Thursday coming up. It's going to be a lot of fun with some partners. And if they are interested in the stuff that I write, they can come to our author page on NASDAQ.com if you have interest in some of the bigger picture stuff that I addressed. Index options at NASDAQ.com. And thank you so much, as always, Mark, for having me. Andrew, so much fun to chat.
And will that event be live streamed anywhere, or is it only in person?
That is going to be recorded. And so I'm not sure exactly what medium it will be put out on after the fact, but thank you for asking. It probably will be available not too long after it occurs next week.
There you go, listeners. So stay tuned to the NASDAQ options content. If you can't make it in Philly this week, then of course, or next week, I should say, then look for a recording of that live stream somewhere. It could be interesting stuff. And speaking of recordings and all sorts of vol content, Mr. Rock Lobster, if folks want to sink their teeth into all that goodness, where should they go? What should they do?
optionpit.com or to Money Map Press for my weekly income cycles, or just join Option Pit, become a pro, and get everything. So that's 888-TRADE-01. So if you want to actually learn how to trade these markets, and when stocks go down and all you do is get sad, instead learn how to do some stuff to make some money when stocks go down. So we do all that stuff at Option Pit, and I cannot believe it, but it will be our 11th year, maybe 12th year. Holy heck, it might even be the 13th year this year that we've been doing this. So somebody likes us, and we've had students actually the whole run. So people learn our stuff and then go and do other stuff. So anyway, check out 888-TRADE-01 for our customer care team, or ask for Ted or Andrew. And if you heard this show, you get 10% off anything at Option Pit.
There you go. The land of the pit. Check them out, listeners. That's going to do it for us here on Vol Views. For all of you on the on-demand side, that will conclude your broadcast network with us. Thank you for joining us throughout the week. If you missed anything, it's all there for you on the network feed. Got all that great content from OIC. It's trickling out to the pro folks now. It'll make its way to the on-demand in the coming weeks. So you have interviews. You'll also have all of the exclusive panel content coming through us because we like you folks. Save you a ticket down there to Nashville. Then, of course, back again on Monday with the option block all the way through to another Friday, another episode of Volatility Views. Stay safe out there, everybody.
Volatility Views is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we aim to exemplify customer focus, consistent technology, and streamlined solutions. In 2019, NASDAQ proudly launched the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. The VOLQ index uses only at-the-money options, offering the investment world a measure of volatility that directly points to the NASDAQ 100. Since then, CME launched VOLQ Futures, VLQ, and we've launched NASDAQ 100 Volatility Index Options, ticker symbol VOLQ, which are AM-settled index options on the VLOQ index that provide investors with a new way to gauge forward-looking equity market swings. Learn more about these exciting new volatility products at www.nasdaq.com/VLOQ. You can find more on NASDAQ's full suite of index options products at www.nasdaq-100-options-NQX-NDX-VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.